Hello everyone, and welcome to our live stream. My name is Gerhard from Deventer, and I'm a senior Fintech analyst in the South African Reserve Bank's Fintech unit.
Hi all, I'm Kagiso Mothibi. I am the head of the Fintech department at the Financial Sector Conduct Authority. So Gerhard and I are here today to chat about what we've recently launched within the Innovation Hub, particularly the regulatory sandbox. So we're going to start by giving you an overview of the sandbox before we segue into a Q&A section after the discussion. And if you'd like to ask any questions, please do so by leaving the comment on the left section of the live stream, and we will try our best to get to them. If we do not manage to get to your questions, please don't hesitate to send an email to sandbox@ifwg.co.za. All right, so let's get into it. So as we previously mentioned, and also in our launch, we've previously described the Innovation Hub, which is essentially a project of the Intergovernmental Fintech Working Group, whose members include SARB, FSCA, National Treasury, National Credit Regulator, Financial Intelligence Center, and the South African Revenue Services. Gerhard, do you want to give us a quick breakdown in terms of the Innovation Hub and its functions?
Sure, Kagiso. The Innovation Hub's primary goal is to promote responsible innovation within the financial services sector in South Africa. It consists of three structures or innovation facilitators, and they are the Regulatory Guidance Unit, which serves as a central contact point for innovators when they have questions with regards to policy and regulation. And what is cool about that is previously, if you're a fintech, you might have struggled to get access to the regulators. Now you have one point of contact that potentially puts you in contact with 6 different regulators. The second structure, and the reason for this live stream, is the Regulatory Sandbox. It provides market innovators with an opportunity to test their product for regulatory fit within the existing policies and regulations, and in particularly where it pushes existing boundaries. This will be done in a controlled manner under supervision for a specific period of time. And to put this in another way, this is testing against regulation. So this might be a little bit different to commercial bank or commercial sandboxes, in that we have a key focus on regulation. In our third structure, or the Innovation Accelerator, we look to provide a collaborative environment for us as regulators, and potentially along with industry, to explore emerging innovation as it relates to policy and regulatory mandates. You can almost look at this as happening in 2 streams. The one is looking at technology and how that affects policy and regulation. So you can think of a proof of concept like Project Korka, while in the second stream, we look at policy and regulation as it's being impacted by technology-driven innovation. And there you could look at, for instance, the recently released policy paper on crypto asset regulation. Back to you, Kagiso.
Thanks, Gerhard. So as Gerhard has just mentioned, the Regulatory Sandbox is essentially a controlled testing environment that allows financial services innovators to test finished products or services that do not necessarily fall within existing regulatory frameworks. So let me break that down a bit further. If, for example, you're a fintech firm and you've developed a product that you're ready to bring to market, which is actually quite important. However, you've determined that it doesn't fit within the existing regulatory frameworks, or you're just not sure, you can apply to get into the sandbox. Should you be accepted into the sandbox, you would then be given a 6-month period for testing your product with the guidance of the sandbox team. And you'll also have access to a suite of subject matter experts in terms of regulations. And through that process, that's when we will then test the benefits of your offering against risks. So we will essentially test to what extent does your product protect customers and benefit customers versus the financial soundness and the risks posed by that offering.
Thank you, Kagiso. Our IFWG sandbox operates in cohorts, similar to some of the other regulators globally. This means we take applications in groups. This enables us to process them effectively, and it also creates an opportunity for us to learn along with the innovators over a focused period of time. As mentioned, the IFWG Innovation Hub was recently launched, and we have been open for applications since the 7th of April. You can access these applications forms on the IFWG website. That is www.ifwg.coza. Under the Regulatory Sandbox tab, you can download an application form, and we are looking forward to receive your application. We've actually already started to receive some applications, and we are keen to get yours. The closing date for applications will be on the 15th of May 2020. All accepted applicants will be informed by June 2020, with testing expected to start as of 1 July 2020. I just want to highlight, even in the light of COVID and the lockdown, some of our colleagues are working from the office, and those of us, like myself sitting here in a t-shirt today, are working from home, and we are available digitally. We are committed to meeting the timelines and assessing your applications. We are, however, monitoring the situation and will update if necessary, but we are definitely committed to meeting the timelines as communicated. Back to you, Kagiso.
Thanks, Gerhard. And absolutely, virtual ways of working will definitely be one of the approaches that we use in driving the sandbox. So if applicants are accepted into the sandbox and they are offered regulatory relief to test their products or service, and by this I just mean that when we're testing products and services that don't fit into existing frameworks and they make their way onto the sandbox, there may be areas where regulators may be able to provide exemptions on in order to safely test the products or service over that 6-month period where applicants will be testing their products in the sandbox. There are, however, just as a disclaimer, there are, however, certain types of regulations that we are not necessarily able to relax in any way, where exemptions may not necessarily be available. But we will review these on a case-by-case basis, and we will definitely be able to inform you should that apply. But in general, once you get into the sandbox, do know that an exemption will be provided for you to test your products and services accordingly.
As mentioned, the regulatory sandbox has stringent entry criteria. In order to apply, you must make sure that you meet these criteria. I will highlight some of those criteria to you now. First of all, you must intend to deploy within the South African market. So you're testing against South African regulation. Your product or your solution must not fit neatly within the existing regulatory framework and should challenge the existing framework. As we mentioned, you are testing against regulation. Your product also needs to be beneficial to the consumer or the market at large. So for instance, if we're looking at a business to consumer company, typically what we would look for is for your innovation to increase competition, improve financial inclusion, or improve access. If you're a business to business company, we would want your innovation to lower cost, increase efficiency, or improve compliance. So we look, something like a RegTech solution. Further considerations might include that your solution is innovative. In other words, it must be different to what is in the market already. We are also looking to test fully developed products, and so your technological solutions should be ready for testing. You should have sufficient funding to sustain you during this period of testing. And where you are working with partners, you must make sure that those relationships are secure and in place.
All right, thanks, Gerhard. So testing will be completed over a period of 6 months, with participants submitting progress reports on a monthly basis to the IFWG. At the end of that 6 months, we will then transition from the sandbox environment to the real world environment. And by this, we just mean that the sandbox team members and participants will ensure that a report is generated that provides an outcome of the sandbox test, whether the products were viable, and that those products can then go safely into the market. So that's essentially the outcome that we reach at the end of that 6 months.
Globally, over 50 financial sector regulators have already rolled out regulatory sandboxes. This has been done both in developed markets like Great Britain with the Financial Conduct Authority, as well as in more emerging markets such as Sierra Leone and Mozambique. In fact, during the last couple of days, we noted that the Saudi Arabian Monetary Authority had announced their new cohort with 9 participants having been selected from 103 applications. I also want to highlight that in a recent report by the FCA on their regulatory sandbox, they highlighted one of the key benefits of their sandbox being the close interaction between the regulators and the innovators.
Thanks, Gerhard. So, owing to this development of Sandbox, what is particularly special about our Sandbox is that South Africa, as the IFWG, we're a global first in terms of integrating all the efforts and expertise of 6 different regulators rather than a single regulator. And this becomes really important as it represents a coordinated and collaborative approach to the financial services landscape of South Africa. So rather than just being in a sandbox for a single regulator, our sandbox allows you to be in a sandbox that gives you access to multiple financial sector regulators all in one go. So that's been cited as a world first, and definitely it will be a benefit to the South African financial sector in that it allows us to be a one-stop shop for innovators in the financial sector to test their product offerings.
I agree, Kagiso. I think this is really something special and has the potential to provide a lot of learning opportunities, both for us as regulators, as well as fintech firms that participate across the financial sector in South Africa.
Great, Gerhard. So now that we've gone through the IFWG's regulatory sandbox in quite some detail, let's now see if we have any questions. So how it will work is our moderator will help us choose some of the questions to answer, and myself and Gerhard will definitely endeavor to answer all those questions. If we do, however, run out of time and don't manage to answer your questions, or you think of them afterwards, you can still send us questions at sandbox@ifwg.co.za. All right, Gerhard, so let's get into it.
Okay, so I see that we have already received a question. I'm just going to read it out. It asks, what's the difference between a regulatory sandbox and an incubator? So a little bit, and that's from Enrich Duisman. So a little bit earlier, I mentioned the difference between a regulatory sandbox and a sandbox. The difference between a regulatory sandbox and an incubator is, first of all, the focus on regulation from our regulatory sandbox. We also do not provide business support services. So we don't tell you how to run your business, for instance, what operating model to follow. We also don't provide funding, although we do look to work across the innovation ecosystem in South Africa. And we are aware, for instance, of the Innovation Technology Agency, which does provide funding. But that in broad hopefully answers your question, Andrew.
All right, thanks for that, Gerhard. So I see we've just received another question from Philip, and he asks how the Innovation Hub and Sandbox works with respect to interagency coordination. So great question, Philip. So before I answer it, I just want to provide a bit of context. So in terms of the cohort that we're going to be running, we're not going to run it along the lines of a specific theme. So it won't be focused just on payments or on lending or on insurtech or on financial planning and advisory. We're open to all streams of innovation. And so because we're open to all streams of innovation, that means we could get innovations from a number of fintech verticals. And as a result, because of that, it will then involve the coordination of all regulators that are involved. And in terms of the applicants that we tend to get and the guidance that we typically have to provide, we sometimes get applicants or fintechs that seek guidance from a single regulator. So the legislation or the financial activities pertain to the legislation of a single regulator. But in some cases, we find that it straddles across multiple regulators. So there may be payments elements, there may be insurtech elements, there may be lending elements. And in those cases, we then have to bring all those regulators to provide some sort of guidance to that fintech, right? So it'll work the same way in terms of the sandbox. It won't be themed or focused on a particular theme. We're open to all innovators. Once that application comes through, we'll then review it. In some cases, a single regulator is appropriate if the product only applies to one piece of regulatory frameworks. In some cases, you may find that it straddles across multiple regulators, in which case the subject matter experts that will be reviewing and providing feedback on the testing process will come from a number of regulators. So it'll be dependent on the application, and also the underlying financial activity of the fintech.
Cool, thank you, Kagiso. I see another question that's come up from Dino Lazaridis, asking us how we decided or landed on the entry criteria that I referred to a little bit earlier. So Dino, we looked at international standards. We're also part of international bodies where we've done studies on sandboxes globally. We then looked to localize those, for instance, through looking at our respective mandates and at the policy objectives that we want to drive across the IFWG. So you would see where some of the global sandboxes, for instance, might have a stronger focus on innovation. That is because those regulators have that as part of their primary mandate. But we looked at what is applicable to our environment and what it is that we want to achieve as the IFWG.
Thanks, Gerhard. So I see we've just received another question from Angelo Roussos, and his question is, why is there a closing date at all? Surely this should be an ongoing process and initiative. Thanks, Angelo. So that's a great process question. So from a process perspective, we do need to close applications for our first cohort because we're going to be starting our first cohort at the same time. So because of that, we have to have a cutoff date for when we are able to receive applications. We will then go away and review the application. So May the 15th is the cutoff, and then we'll review the applications and then in June provide feedbacks to each of the fintechs that have applied, whether they've been successful in their entry or they would be encouraged to apply at another time, in which case we then start the cohort from the 1st of July. So because of those hard dates that are in place, we do need to have a cutoff that allows us to give enough time for fintechs to apply. Secondly, allows us enough time to review the applications. And then lastly, then actually start all the successful applicants in a cohort that runs over 6 months. If you do not make it onto the first cohort, that is not the last point at which you can get onto the sandbox. So there's two pathways that could address your needs to get onto the sandbox. So in one pathway, there could be another applicant who offers a similar financial product and service to you, who made it onto the sandbox and whose outcomes may apply to you as well. So you may then be able to also apply for an exemption off the back of the success of one of the cohorts who may offer something similar to you. So that's one pathway. Another pathway is if you did not make it onto the sandbox, there's still an opportunity to apply for another sandbox. So next year we'll be running another one. So that's also another opportunity to make it onto the sandbox. So those are the various pathways that one can follow if they don't necessarily make it onto the first cohort.
Thanks, Kagiso. So if I can put that in a different way, I think the fact that we've chosen, there's two kind of models according to which the sandbox can be run. One is a cohort and the one is that it's continuously open. Although we've chosen a cohort-based approach, this does not mean that we will only run one cohort. And Angelo, if you want to submit for a next cohort, that's definitely open, and we'll look to definitely not finish with this cohort. I'm going to move on to the next question from Riyad Hanslow. He was asking whether entry into the sandbox could result potentially in regulation change afterwards. And so, Riyad, yes, the purpose is to test against regulation for the purpose of identifying areas where regulation or policy might be negatively impacting on innovation and products getting to market. Definitely a potential outcome of that might be that we need to update policy and regulation. I think one of the things to bear in mind that's important should that happen is both the exit strategy and then also the transition strategy. So policy and regulatory changes might take a while. So it could happen that after you've exited the sandbox and a change is required, we might have to, for instance, extend the period of regulatory relief, or it might be possible to continue running in the meantime until that change is made. So I'm taking a long time to answer you, Riyad, but the short answer is yes. Definitely testing in the sandbox could result in a policy or regulatory change.
All right, thanks for that, Gerhard. So next question comes from Mashikwana, and he notes that some products will need to be piloted on the ground, therefore cannot be done virtually. What considerations are given to this? Thanks. That's actually a very pertinent question, particularly within the context of the COVID-19 epidemic. So that is something, as we're reviewing applications, we will definitely test with the fintech and establish whether or not their product or service is an essential service. They will be able to run the pilot and the test that would need to be run. In the case that is not possible, then we'll obviously have to establish what mitigations will need to be put in place. So that's the short answer of it. But then, as we alluded to earlier, as Gerhard touched on, if, for instance, you are able to actually access a set of customers, whether digitally or you're able to mitigate any of the risks in light of COVID, we still are able to, from an innovation hub perspective, collaborate with you virtually in terms of reviewing some of your outcomes, right? So on a monthly basis, there will be a report that will be generated, which will be reviewed by subject matter experts, and you will be working with a case manager on a day-to-day basis. So throughout that process, through digital technology, we're still able to actually access you and run the tests. But you are right, a prerequisite to actually being able to run tests is whether you can actually offer your products to customers at all. And so during the application process, we'll test whether that's something that's possible, and that'll obviously shape whether that particular service will be able to make it onto the cohort or not.
Apologies. One of those things that happens when you work digitally is that you forget to unmute your mic. So I apologize for that. Bank Builder just asked a question that was asked a little bit earlier. So I'm just going to reiterate that the fact that we're following a cohort-based approach does not mean that we will only have one cohort. So the cohorts will typically run for a period of 6 months, after which we'll assess the outcomes and determine a way forward for those that have been in the cohort. However, the intention is to run multiple cohorts. So if you're not ready to get into this cohort now, look for the next one happening in all likelihood in 2020.
Thanks, Gerhard. Our next question is from Murida McKay, and the question is, the application process, how scalable is this solution offering? So I'll take my best guess based on my understanding of the question. So the application process is open to everybody. It's digitally ran, so we don't envision encountering any bottlenecks. So I mean, to our extent, in our minds, I think it's very scalable and accessible to all applicants. However, that said, in terms of the number of participants that can be in a cohort, that will be limited. So in terms of the openness of the applications, if we're thinking of it as almost like a pipeline or a filter, the application is open to everybody, but the cohort size is limited. And that's obviously to ensure that we're able to run high quality tests and ensure that the participants benefit from actually participating in the sandbox. So just to answer your question, I think those are some of the process considerations we've made.
Cool. Kagiso, one of the next questions is surrounding the extent of regulatory relief or exemptions that's been made available. As I think highlighted a little bit earlier during the live stream by Kagiso, we have to consider this on a case-by-case basis. And I see the question is from the Ketso. So therefore, I can almost give you the consultant's answer and say it depends. We have, however, engaged with all the different regulators involved, and we are aware of the regulatory framework or the legislative framework that is available. So for instance, under the Financial Sector Regulatory Act, there's the possibility to grant exemptions. This is, however, also should be seen in relation to the sectoral laws, such as the Banks Act, and there might be some regulatory relief that's available under those laws. For some of the other regulators that don't fall directly under the Financial Sector Regulatory Act, like the NPS, We know that they're busy reviewing the National Payment Systems Act and financial surveillance, the FIC. We've also engaged with them, and we know what regulations is available. As Kagiso highlighted, though, there are some instances, for instance, when we look at Financial Action Task Force requirements, those things, or those, we can't grant exemptions there. This does not necessarily mean that testing is not possible. So in some instances, we might not be sure how new emerging technology fits within regulation and whether it's possible for them to meet such regulation. So for instance, for some of the virtual asset service providers, we might do some testing in order to determine feasibility of testing. And I think that's pretty much what I wanted to highlight under that question, Nikita.
All right, thanks, Gerhard. So our next question is from Grant Kruger. It's a two-pronged question. So the one aspect of the question is, does the sandbox identify problems to be solved by the fintech startups? And the second aspect of that question is, how do you go about identifying what the startups should focus on? So thanks, that's actually a really good question in terms of what then happens when you're in the sandbox. So absolutely, so throughout the testing period, we will essentially, well, actually, let me maybe start from the beginning. So once you're in the testing parameters or testing objectives will be defined. And remember, the key principle is to test benefits against risks. So what benefits does that solution offer the South African financial services landscape in terms of driving financial inclusion, customer outcomes, and just disrupting how things are done, right? So all those benefits that will be tested against any risks posed to customers. Is there risks of misuse? Is there risk of arbitrage? Does it create financial instability? Those are just the myriad of risks. Obviously, some of them will be very specific to the product itself. So those testing parameters will be identified upfront. And then once those have been identified and agreed with the fintech and the case manager, they will then be assessed over that 6-month period where there will be a very tight feedback loop between the case manager and the fintech startup that's testing their solutions, as well as the subject matter experts who will be reviewing the outcomes on a monthly basis. So to answer the first questions, there will absolutely be an identification of problems to be solved by startups as it pertains to risks that have been picked up. And also, essentially, the other aspect, the positive aspect, is the benefits will absolutely be noted as something that would actually benefit the fintech in terms of the final outcome. So that feedback loop will definitely occur throughout the sandbox process, not only just at the end. So there'll be a tight feedback loop. And then the second aspect of it, how do you go about identifying what the startups should focus on? So I think with that one, I'd probably just offer a bit of a disclaimer in terms of we do not give the startups strategic guidance in terms of what they should focus on, product market fit. The product needs to essentially be already ready, and the strategy needs to have already been outlined and agreed by the fintech. What we will do, however, is within the parameters of testing benefits versus risks, we'll definitely provide feedback and what areas to focus on to mitigate any risks. And the idea will then be to assess whether you can mitigate any risks during the sandbox process. And then at the end of the process, we'll then obviously give a full, more comprehensive report as to what the final outcome is. So that's the extent to which we will guide the startups on what to focus on within the context of regulatory frameworks and risks identified that were agreed at the testing parameter stage. So those are some of the things, Grant, that you should think about definitely when you do enter the sandbox.
Thanks for that, Kagiso. I maybe just want to highlight another aspect, and I'm not sure if that was part of Grant's thinking in asking that question. So we don't have a themed cohort. And so, Grant, if that is what you're asking, applicants can apply for any area. We're not giving guidance in terms of it only being payments, as an example. I see we have another question from Bank Builder, and he asks, what happens to clients after the 6-month period finishes? And so I think I want to maybe highlight 2 aspects to that. I think there's different ways in which somebody or a company that's busy testing can exit the sandbox. One is if either the company itself or the regulator during the period of testing decides or identifies an issue, a decision can then be made to withdraw somebody from the cohort, or they can make that decision themselves. However, for successful testing, there's potentially three outcomes. One of them we related a little bit earlier with Riyad's question. So it's possible that you go through testing successfully, the regulators are happy, and either a regulatory change is required. So there's actually two different scenarios. A regulatory change is required or no change is required, and they can then obviously carry on and continue. There's also a third instance under which, after the testing period, we may assess the innovation and determine that ultimately, as Kagiso mentioned, the risk versus benefits, and we can determine that it's not beneficial for this product to go to market. So that's the first part that I want to highlight in terms of how testing could end. Then to answer Bank Boulder's question more directly, some of the controls that we are putting in place is through, on a case-by-case basis, through discussion with the entrant, is as I mentioned a little bit earlier, it's a controlled environment. So we might determine that we limit the number of customers that you might have during this period, as an example, to 100 customers, and only allowing certain transaction values. We may also consider other measures, such as making sure that, for instance, you don't offer a live product, as an example, if there's a likelihood that testing might only end after 6 months. So I think from a customer protection perspective as well, all customers that sign up during this testing period must be aware that this testing is happening under a sandbox environment, and they must acknowledge that as well. So I think we'll look to put the measures in place. So it's definitely not that we're going to allow a company to run and acquire thousands of customers, which they would put at risk. So definitely customer protection is something that we'll have to consider when we look at the testing, how we do the testing, and the restrictions that's placed on testing. So hopefully, Bank Boulder, that answers your question.
All right, thanks, Gerhard. And I mean, just to also add another point there. So I think at the end of the day, one of the pathways that Gerhard outlined, if the sandbox outcome is successful and it's determined that benefits outweigh the risks, while we are making our way to changing some of the regulatory frameworks, the fintech still can have exemptions that they apply for and obtain to trade in the meantime. So the exemption is almost a short-term buffer that we use to allow the fintech to operate while we go away and amend regulations. So that's also that's how we'll essentially be running the exit process for a successful fintech. All right, so I see we've also got a question from Toby van der Spey, and he knows that the multi-sector sandbox is fantastic. Thanks for the feedback. And then he asks, should we assume restrictions will apply in the sandbox in terms of how far and wide we can drive adoption during the testing phase? Great question. So, and Gerhard touched on it and alluded to it quite a lot in the intro. So absolutely. So in terms of the testing that will be done and the parameters around the testing, it will be limited. It will be in a controlled sort of setting. So by that we mean we'll limit the number of customers, we'll limit the scope and breadth so that we can run a sampling exercise, so to speak. And through that sampling, we'll then be able to determine whether risks and benefits, how they stack up against one another. So definitely it'll be controlled. It'll be on a sample basis to enable us to test before we grant an exemption for it to be scaled at large. So that's essentially the process that we'll run. And how that will take place is once the applicant has been determined to be successful, they'll then work together with the case manager, and very clear and specific and measurable testing parameters will be outlined, including how many customers you can actually test against, including what outcomes are sought. And through that process, that's then how we'll shape what ultimately will be the measure of success for that particular fintech when they enter the sandbox.
Cool. I see, Kagiso, that we have a question from Mpaledi asking whether the product has to be at an MVP or stage, or whether it could be a prototype. So, Mpaledi, I think we mentioned a little bit earlier during the live stream, we are testing against regulation. We ideally want to test products that are ready to go to market, because I think, as has been highlighted with some of these previous questions, that there are live customers that is being impacted. I think we also need to look at that it is possible that you might change your product during the phase of testing. However, we would still want you to test for the product that you applied for during the testing period. So we want to see a product that is ready to go to market. We understand that testing might highlight the need to pivot. However, the testing is for a specific product that should be ready to go to market. So I'm hoping that answers your question, in Mpaledi. So it's not, maybe if I can also just approach it from a different way. You should have, by the time you get to the regulatory sandbox, you should have done things like security testing and functional testing and these kind of things. It should be a fully functional product that is ready to go to market.
Thanks, Gerhard. We've just received another question from Colin Adams, and his question is the regulatory sandbox focused on domestic-only solutions, or will there also be testing for cross-border solutions? Thanks, that's a great question. So we're open both to domestic-only solutions and domestic plus cross-border solutions, just to answer that in short. So as long as the cooperations do take place in South Africa and service offerings are to South African customers and regulatory frameworks of South Africa are what you're looking to test your offering against. So that's the primary litmus test for us as to whether to accept a participant. But yes, their solutions could very well be cross-border in nature. But then because of that, they may also, our outcomes may only cater for South African jurisdiction, and they may still need to engage with other regulators in other markets to close that loop in terms of ultimately being able to enter other markets. But to answer your question in short, we're open to both types of solutions.
Maybe also just to highlight two things in response to that question. If cross-border testing happens, we have to get approval from the other jurisdiction as well. That's the one thing. I think the other thing to highlight, if you can see my T-shirt on screen, we also participate in bodies such as the Global Financial Innovation Network, which is called initially was called the Global Sandbox. Where part of what they are trying to achieve is exactly cross-border testing. So I think we are open to it, but it must be in collaboration with the other, our cross-border regulators.
Yeah.
I'm looking at a question from Haroon Esop, asking whether open APIs will form part of the regulatory sandbox going forward. And Haroon, I might not be understanding your question 100% correctly. I think if there is, so I'll try and answer in both ways, and hopefully that addresses the question. I think if you have a solution that deals with open banking and that there is no existing regulation or where the guidance is unclear on that, definitely we are open to looking at that and testing that. If you're asking it from the perspective of whether we'd be looking to use open APIs, for instance, in reporting to us, I think that's something that we could look at going forward. It's probably something that was not in place in this first cohort, but I think based on learnings, we could look at that as well. So hopefully in my two answers, one of them addressed what you were asking, Haroon.
Thanks, Gerhard. I see we've received another question from Carl Nemo, and his question is two-pronged as well. So he asks, one, are you able to apply to the sandbox to assess if the solution is in line with current regulation? And two, want to test further innovation. So good question. So the main priority is definitely to test the solution against innovation. So that's the premise upon which we accept applications into the sandbox. However, the criteria we use is absolutely the extent to which that particular fintech will drive further innovation in the ecosystem. So the second part of your question, yes, that's a criteria that we use to tie break applicants and decide which ones to make their way onto the sandbox. But once that particular offering has made its way onto the sandbox, then the primary test is that solution in terms of its benefits and risks against regulation. And ultimately, the outcome will be on that basis, where either you receive an exemption because we've determined benefits outweigh risks, or in essence, there's issues and risks that have been identified that need to be addressed by the particular fintech before they can launch their product to the market. So that's essentially where we're focused on, and the premise upon which the sandbox will be receiving participants.
Thanks, Kagiso. And I see we have a question from Paresh Daya. In terms of the process for the sandbox, and potentially also a two-part question, if I'm reading it correctly, also looking at what would constitute conclusion of testing. So Paresh, I think in terms of the process, I'll try not to go into too much detail. I think part of it is that we'll receive the applications. A case manager will get assigned. The case manager will be somebody like myself. I would work with a subject matter expert from a regulatory perspective. We would look to see what regulatory relief is available. We would then go through a process where we determine whether it's applicable. We take that to an IFWG committee which makes the ultimate decision. I think in the run-up, and possibly just reading your question again, more directly related to that is we'd have to engage with the entrant in terms of specific limitations that need to be in place, as well as the testing criteria that we will go according to. And this will happen in discussion between the case manager, the subject matter expert, and the entrant. So testing might be different on a case-by-case basis. It depends on what the requirement is. So it might be that the regulator wants specific reporting on a monthly basis, or maybe more frequently than that. Currently, when I touched on different ways in which testing can end. So currently testing is for a 6-month period. It is possible to ask for an extension if it's not possible for us to reach a conclusion, or if it's identified that a longer testing period is required. So I think two parts to the question. There's a time limit to testing, but the conclusion or the success of the conclusion will also be based on the requirements or the restrictions that's placed on testing, and the test plan that's put in place on a case-by-case basis. So Paresh, I'm hoping that addresses that question.
Thanks, Gerhard. And also just possibly to add, if the testing is a success and we're able to run all the tests quite quickly, and the data becomes self-evident and available in a quick period, the testing period can conclude. The testing process can conclude well before the 6 months. So that's also another consideration to note, that they don't all necessarily end at exactly the same timeline at the end of that 6 month. But the 6 month period is what we've given ourselves just as a maximum to run all the tests that we need to determine an outcome for the fintechs. So our next question is from Jeff Cook. So his question is, to what extent will the sandbox environment allow a regulated entity to structure its offering in a manner that's different to that prescribed by the legislation? So I'll answer that question in two ways. So firstly, if you recall from the beginning, we mentioned that the whole premise of the sandbox is to test innovations that don't fit into existing frameworks. So a fintech has developed an innovation, and there may be customer appetite, but existing regulatory frameworks just do not cater for that particular solution. So it's unclear from their perspective if there's any regulations at all that apply. The sandbox environment then becomes and gives us an opportunity to build up a fact base around that particular offering. We get to know more about it, we get to learn its benefits versus its risks. And then off that fact base, we then are able to motivate a need to change and amend regulations. So that's the whole premise of the sandbox, to essentially shape regulations where they don't currently exist, to cater for innovators that provide very clear benefits to the financial sector. So that's the whole premise of the sandbox. So definitely through the sandboxing process, you are ultimately able to shape, influence regulations. And then within the sandbox itself, so the second aspect of it is, even within the sandbox itself, there is also a very strong feedback loop between case managers, subject matter experts, and the fintech, where through some of the recommendations and insights they're provided, the fintech will then be able to also make decisions as to whether they want to iterate and pivot their solutions in order to skew on the side of benefits as well. So there's also that opportunity and feedback loop as well, where as regulators, we identify clear opportunities to amend our regulations going forward, but also where the fintech can also iterate and pivot their solutions as we give them feedback. So I think those are two areas where you can think of in terms of just how ultimately it may lead to legislation or regulatory frameworks evolving.
Thanks, Kagiso. So I see the next question is from Jordi, asking whether there's intention from the IFWG to publish regular reporting, for instances, on a monthly basis based on the data that we receive within the sandbox. So I'll maybe say two things. I think first of all, for us as the IFWG, this is the first time that we are doing this, so we definitely have ideas of how we do this. We have different processes in place and ways of which we see things work, but it's also important for us that as we learn throughout the process, that we are agile and update things ourselves. So that being said, in all likelihood, we will not publish any reporting on a monthly basis. I don't believe that we want to publish any detail on the reporting for the specific companies. However, we would look to publish some form of publication at the end of the cohort to indicate some of the learnings that we've had. In particular, if there's learnings that's important across industry. So, for instance, that we believe, activity ABC should get regulated, and this might be the way that we do that. Definitely, we want to share those learnings with industry, but we probably don't want to share the detail of individual companies testing during that time period.
All right, thanks, Gerhard. So we've just received another question from Avish, and he asks, would fintechs that don't clearly fit within a single FSCA license category be allowed into the sandbox? So that's a good question, and that would depend. So if there's other regulatory frameworks that apply, existing frameworks that apply, whether it's from the Prudential Authority, whether it's under the FIC, whether it's under the National Credit Regulator or any other regulator for that matter, then that would be the additional licenses that a particular fintech would also have to obtain. So if there is existing frameworks in place for the financial activity that fintech pursues, then absolutely the fintech would then need to interface with other regulators. But because our sandbox or our innovation hub as a whole is a single point of entry, we'll be able to determine that. So as the fintech engages with us, we'll be able to determine if their activity straddles across multiple regulators, and we'll bring them all together in order to ultimately give guidance as to what existing regulatory frameworks apply. So that's if existing regulatory frameworks are in place. If, however, there are no existing regulatory frameworks, but the activity still straddles across multiple regulators, that's also permissible within the sandbox. So your financial activity does not have to be focused on a particular regulator only. It could be multi-regulator in nature, and the sandbox certainly caters for all those particular solutions because it's essentially a multi-regulator platform. And so you'll have access to all the regulators to ultimately give you the subject matter expertise and guidance that you need, whether in the sandbox or whether as just rudimentary guidance on a day-to-day basis.
Kagiso, maybe I just want to say something related to Avish's question, but maybe not 100% directly answering it. So I think people might be wondering what would be kind of top tips for making sure that they are successful in applying. And I think When you download the application form, as well as on the website, you'll see that we list the key requirements. And I think it's important that as you go through and you complete your application, that you answer those questions specifically. Some of it relates to a vicious question then. So as I mentioned, it's a regulatory sandbox, therefore testing against regulation. And we ideally want you to have done some research in terms of where you think you fit within the regulatory framework, and for you to highlight to us where you believe the challenges are. And hopefully that then helps you in completing the application form and addressing those requirements that we are looking at. So I see that another question has come up. If you just give me a second to just have a read. So it asks, how can risk and compliance professionals who may work with fintech companies best work with the Innovation Hub to appropriately guide the business? And I think that question was asked by Kudzai Taka. So Kudzai, I think that we mentioned the different structures at the start of the live stream. So we look to know who is in our innovation ecosystem. And we have, for instance, engaged with incubators such as Alpha Code and a few others, including Launch Lab in Cape Town. So it is definitely possible for us to set up engagements like that and to speak at certain events and to help address certain questions. If there are specific questions from your ecosystem where you want to guide people in our direction, the regulatory guidance unit, also the single entry point is on our website. You can also guide them to ask specific questions there. So I think that's two ways that I can highlight. We also look to have regular market engagements through different structures. So for instance, we also over the past 2 years, let's say now 2.5 years, have hosted workshops and things like that. So definitely there's different ways for you to make contact with us, engage us, and we can see how we can work together with you to kind of help create regulatory clarity to your stakeholders.
Thanks, Gerhard. So yeah, that's also a great question. I think, risk and compliance professionals definitely are a key stakeholder. And what's happened in the recent period as well is we've had a number of inquiries and even face-to-face meetings with many risk and compliance professionals where we share some of the principles around the hub so that they can also play an expert and guiding role with their various constituents. So we're definitely open to that collaborative initiative and through the platforms that Gerhard shared. So that's something we're absolutely open to and have been having conversations. So the next question is from Riyad Hanslow, and the question is, sorry, it's just disappeared. So the question is the Sandbox supported by commitments from individual regulators to promptly respond to amendments of regulation to enable firms to be able to service customers beyond the 6 months? So Riyad, absolutely. So all regulators have committed to the efforts of the IFWG. Essentially, the IFWG encompasses all the regulators. So there is implicitly with that and explicitly, there is a commitment from all regulators to essentially contribute, provide subject matter expertise, and ultimately clearly guide the fintech as to what regulatory frameworks apply to them or what potential exemptions and regulatory challenges that they may need to address. So all those will definitely be provided by all the member regulators that we've outlined initially. And that also does occur beyond the 6 months. So that can happen in two ways. We could either provide you guidance through the guidance unit where you may have further regulatory guidance queries, or through the exemption process, as we've also outlined. So through the exemption process where you have applied for an exemption, we're able to then enable a successful fintech startup that's gone through the Sandbox to continue operating. So those are the two ways in which we'll definitely be engaging with fintechs during the Sandbox process and on an ongoing process afterwards beyond the 6 months.
Thanks, Kagiso. I see a question from Ken for Mark asking how can a fintech protect their IP during testing? So Ken, I think there's different ways in which we can approach this question. I think where you have what we could, let's say, call secret source that you want to protect, so specific IP, I think it's still up to the fintech company to, for instance, approach an IP lawyer and to make sure that they put the appropriate things in place. I think during testing, there are certain things that on a case-by-case basis you would have to share with the regulator. Those things aren't necessarily IP. It might be for us to understand your processes and how it operates. I think it's important to highlight that for us as, and also I think if you know, depending on what you see as your IP, some of the things, if you're going to offer a product, as soon as you enter the sandbox and you're offering a live product, some of that will be public in any event. So, but where you have IP and things that you feel that you want to protect, you don't necessarily have to share that with us, and you should put appropriate measures in place. I think that the other thing that I want to highlight for us as regulators, our day job in essence means that we deal with, I'm formerly from the bank regulator, so we deal with the pink bank and the purple bank, and we don't go from the pink bank to share, with the purple bank what the secrets are of the pink bank. So we will not share your IP across the board. We'll ask for you what is necessary for testing. However, you also must realize that as soon as you do certain testing, so some of that, for instance, like I'm offering a certain type of banking product that will be known. And I think as with other, I know there's a bit of an idea in the market that ideas are free, it's about implementation. So if your broader idea goes to market, you need to be in a place where you can take that to production and implement that better than everybody else. So in short, I think there's certain things that you need to protect, but there are certain things that you have to realize will be public, because you can't expect to, for certain ideas to be secret if you're looking to take a product to market. So I'm gonna stop there.
Gerhard, so can I just add a few disclaimers there? So I think, again, it'll also depend on how we set up the test. So for instance, if a platform is dependent on an algorithm in order to personalize its offerings to customers, we cannot treat that algorithm as a black box and not interrogate the extent to which it treats customers fairly, the extent to which it's inclusive in nature. So in some cases, depending on the testing parameters and what we're trying to ultimately test against, we may need to know a bit more about how the technology works and test it against practices such as discrimination. But so it'll just depend on a case-by-case basis as well. So there are times where we actually need to interrogate the proprietary technology that underpins the particular fintech, because it shapes how they engage with customers. So that's also just a disclaimer that we obviously need to put out there. So there are cases where that's going to be required. But as Gerhard mentioned, upfront, we will definitely put safeguards in place where we obviously protect your innovation from being shared outside of the scope of the test. We don't share details around the test across participants. So, and as regulators, this is something we practice on an ongoing basis, as Gerhard pointed out in his example. So I think those are definitely things that we'll definitely still be continuing to practice going forward. So we've just received another question as well. The question is, are you guys coordinating with the regulators elsewhere in SADC, Africa, or indeed globally? Many fintech products are cross-border, e.g. remittances, crypto. Thanks, great question. And I'll answer it in short because I think Gerhard touched on it earlier. So we're definitely part of the GFIN network as well, which encompasses multiple regulators from across the globe, from UK, Middle East, and European regulators. And that network of regulators is we are part of. And so that's the global nature and our global footprint. We also engage across the board. So in the United States, we engage with regulators, we engage with World Bank as well. They were part of the process of us even building the sandbox to what it is today. And also we definitely do leverage on best practices and share our own best practices with multiple regulators globally. So that's definitely something that underpins how we are going to be engaging with fintechs, and we can assure you of that for sure. And absolutely, I agree. There's a lot of products that could scale globally. There's a lot of products that are cross-border in nature. And so because of that, we definitely need to collaborate with regulators and also harmonize across various jurisdictions. So that's definitely a principle that we carry and operate on.
So guys, maybe just to highlight that you can go to our website, again, www.ifwg.co.za. If you want to apply, you can apply there. You're also welcome to sign up for our emails, and so we can send it out from there. We have, however, reached the end of our time with you today. So I think from my side, I will say, as we distance ourselves physically, let's stay connected digitally and socially. Take care, everybody. Chat later.
Thanks so much, Gerhard. We look forward to your applications. Cheers, everyone.